Folks, I want to talk about the impact of pent-up demand on travel stocks. Now, as of last Friday, 50% of American population has been vaccinated. And over the holiday weekend, travel numbers finally reached pre-pandemic levels for the first time in over 1 year. That's impressive. Domestically, travel is becoming normalized once again. People are willing to stay in hotels and resorts again. Crowds are no longer something to run away from. People can socialize, conduct business face-to-face once again. What a concept. Everything is pointing to a very busy summer months. And sentiment always precedes imminent change in the price of the stock, since markets are fairly efficient and can anticipate ahead of the actual news for the most part. The sentiment towards travel and leisure stocks continues to strengthen, and I believe those stocks have substantial upside as many people are making up for lost vacation opportunities and will continue to do so for the next few months. Summer is here, it's June. First stock on my list, Travel Plus Leisure Company, ticker symbol TNL. This company provides membership and leisure services. The company offers vacation experiences and travel inspiration to owners, members, and subscribers every year through its products and services, including Wyndham Destinations, Panorama, Travel Leisure Company, formerly known as Wyndham Destinations. They're based in Orlando, home of Magic World. United States, 1 year return, almost 100%. It's a $5 billion market cap. It's got 20 resort lifestyle brands. It's got a lot of upside potential. 4 quarters of positive earnings estimates, $80 price target over the next 10 weeks is probable if the U.S. leisure and vacation sector continues to gain momentum as I expect it will. Next stock on my list, Vail Resorts, ticker symbol MTN. It's one of the leading operators of resorts in North America. The company's operations are grouped into 2 segments, resorts and real estate. It operates 37 alpine resorts in 3 countries, and many of those are across the U.S. of the year. U.S. ski resorts have become 4-season destinations, with plenty to do with skiing stops. Earnings estimates have been positive, back-to-back over the last 4 quarters, which is a good indication of momentum moving into the stock due to increased institutional sponsorship. I've got myself a price target of $360 per share over the next 12 weeks if economy continues to favor travel-related stocks, which is more than likely considering the sector has been struggling for over 14 months and has been moving sideways and now is ready for prime time once again. Hope that helps. Folks, the little guys are leading a charge against Wall Street, and they could open up opportunities to strike it rich even for traders who aren't experts, like you. For the first time in trading history, the balance of power has swung in a totally different direction. Retail investors could have as much potential to move the markets as Wall Street veterans. Folks, the time has finally come for that. The Robinhood effect could forge a new path for everyday traders like you. Now, I want my readers to get a slice of the pie too. That's why I'm revealing exactly how to make the most of this opportunity and more. Now, I have a question for you. Are you ready to get ahead of the next Robinhood capital flood? If you are, click on the link below and let's get started. Make sure to like this video, subscribe to this channel if you're watching on YouTube, stay ahead of the market by being the first to be notified when I post a new video.